And welcome back. In today's video, I actually want to talk about two new reports that was posted on April 25th. And these two reports here are not reports I typically talk about on the channel because they talk about what our housing market was like back in February. However, in today's video, I actually want to share these reports with you guys because in February is when I started to talk about how prices have been increasing in the US on average. So prices have been increasing over the past 2 months. And this is based on data I've been looking at according to Redfin, for example. So in looking at home price changes over the past 2 months, prices are now up by 6.7% from 2 months ago. So back in mid-February, for the 4 weeks ended February 12th to be exact, the median sold price according to Redfin was $343,000. And now by April 16th, the median sold price has increased to $366,000. This means by my dumb math that home prices have increased 6.7% over the past 2 months, despite the fact we're down compared to 1 year ago, down by about 3% according to data from Redfin. I mention this again because this is something that's not being reported right now, because what is being reported right now is year-over-year decreases in prices, yet prices have been increasing, but not the same rate of 2022. So we really saw this shift starting in February, which is why I want to share this report with you guys, as well as Corelogic's report that was just announced on the 25th of April. So let's first talk about this report, which is from the Federal Housing Finance Agency, or the FHFA. I say that quickly here because they reported on April 25th that prices based on their HPI, or their home price index, increased by 0.5% compared to January. So a 0.5% increase from January to February this year. They also reported that prices increased by 4% from last February to this February. I would imagine this number right here is probably going to be negative next month or the month after that once they report March and also April's numbers, because home prices absolutely skyrocketed through June last year. Prices are increasing this year, but not the same pace last year. Therefore, we're going to see negative price growth based on their FHA's home price index, probably in March or April this year. And they say here, U.S. housing prices increased slightly in February. This increase was in part due to a decrease in rates by more than 0.5 percentage point from the peak that was reached last November, as well as historically low housing inventory. I really like how they say historically low inventory, because a lot of other companies talk about low housing inventory, even though inventory is up by more than 50% compared to last year, as well as 2021. But historically speaking, they're spot on, because inventory levels are much lower today compared to historical trends here. Now, here's an image I pulled from the Mortgage News Daily's website regarding inventory levels in the US going back to 2004. So right now, according to this image right here, they don't provide the source of this, but this is something I pulled from the website here. So right now they're stating we have just over 900,000 houses for sale, whereas in 2006, for example, right before the collapse of the Great Recession, we had approximately 2 million houses for sale. Now we have less than 1 million. This means that we would need approximately 1 million more houses for sale right now compared to the beginning of 2006. On top of that, ever since really 2012, we've been seeing this downward trend in the number of houses for sale, especially compared to the past couple of years. And of course, this is a huge issue given the fact we've been seeing fewer new listings hitting the market, which of course is putting downward pressure on inventory levels, which of course is actually causing home prices to increase. And by the way, the FHFA's HPI, or their home price index, is a measure of changes in single-family home values. They actually look at over 400 American cities in order to get to this HPI. So speaking of their HPI, have a look at this. Here is the month-over-month changes. Again, January to February this year. Overall in the US, a gain of 0.5%. Also, year-over-year, an increase of 4%. Now look at the changes in home prices compared to 1 month ago for each of these major regions here, because there's some very, very big differences here. So the Pacific, which is defined as Hawaii, Alaska, Washington, Oregon, and California, posted a decrease of 0.3% from January to February this year. In stark contrast, the East-South Central, which is Kentucky, Tennessee, Mississippi, and Alabama, that posted an increase of 2.3%. The South Atlantic posted a decrease of 0.4%. And by the way, the South Atlantic is Delaware, Maryland, DC, Virginia, West Virginia, North Carolina, South Carolina, Georgia, as well as Florida. Also in the West North Central, that by the way is North Dakota, South Dakota, Minnesota, Nebraska, Iowa, Kansas, as well as Missouri. That posted an increase of 1.1% month over month. Now the year-over-year numbers are a little bit different here because on a national level, they saw a gain of 4% from February last year to February this year. But the Pacific was the only region that posted a decrease year over year, down 2.7%. In stark contrast, the West-South Central, the East-North Central, the East-South Central, as well as New England and South Atlantic posted increases of at least 5%. And by the way, feel free to pause and screenshot this if you guys want to learn more about each of these areas here and the states that are included in each of these divisions. There's two more slides I want to share regarding the finance agency's report here because the changes in the growth rate in home prices going back to 1991, the average annual growth rate is a gain of 4.4% going back to 1991. When looking at home price changes, the averages going back to 2000, the average is a gain of 4.7%. Now here's the kicker right here, because the average annual growth rate in home prices going back to 2012 is an increase of 7.4%. I always tell people that the average growth rate of home price appreciation in the long run is in the range of 3 to 6%. But it just goes to show how the trajectory in home prices over the past 11 years is actually more than that, because going back to 2012, the average is a gain of 7.4% and not 3 to 6%. Now here's the last slide I want to share with you guys before I go over Corelogic's report here. So this is a look at home price changes from February 2021 to February 2022 in blue. In red is home price changes from February 2022 to this February. So again, on a national level here, we saw gains of 4% over the past 1 year, going back to February 2022. Whereas the gain we saw back in 2021 through 2022 on a national level is a gain of 19.2%. So of course, when looking at this here, the biggest home price changes from 2021 to 2022 was actually in the Mountain Division, a gain of 24.5%. That was followed very closely by the South Atlantic, a gain of 23.8%. In contrast, the biggest increases over the past 1 year was actually in the East-South Central, a gain of 8.3%, whereas the Pacific saw a decrease of 2.7%. It just goes to show how every housing market's different, and the housing market is very volatile, to say the least, this year. So Corelogic also posted on the 25th of April as well regarding home price changes this February. It says after 7 months of monthly decreases, home prices posted a very small increase in February, up by 2% on a year-over-year basis here. While lower rates helped entice some potential home buyers off the sidelines so far in 2023, the U.S. housing market continues to face many headwinds, including pessimism regarding consumer sentiments, fears around recent banking turmoil, the lack of a seasonal uptick in the number of houses for sale, and the continued mortgage rate volatility, where rates have been absolutely all over the place this year. On top of that, given the wide variation in housing market conditions across the United States, which is making it very challenging to report what's actually happening in the housing market in the US, these trends continue to be mixed and unclear, which confuses buyers and sellers, as well as YouTube viewers, of course, as well. I'm doing my best. They also talk about how rates are too high right now. The catalyst, according to Corelogic, is a rate of 5.5%. So in other words, we won't see a huge uptick in demand until rates decrease to about 5.5%. Nevertheless, though, according to Corelogic here, the interaction of the usual spring demand rush and the lack of houses for sale for existing houses has once again put upward pressure on prices, which posted a monthly increase in February following 7 months of monthly decreases. In February, the Corelogic S&P Case-Shiller Index inched out a 2% year-over-year increase down from a 3.8% gain in January, marking the 10th straight month of decelerating annual home price gains. So February's year-over-year increases, a gain of 2%, was the slowest pace going back to the summer of 2012. Also, some markets will see more significant price decreases in 2023, though decreases are expected to remain regionalized and specific to metro areas that saw relatively more price growth during the pandemic. Seattle tops this list with a 17% cumulative decrease since the peak last year. So home prices down by 17% in Seattle compared to last year's peak. In contrast, Miami, Atlanta, and New York experienced the smallest decreases of about 3%. Also, check this out because this is wild here. Compared with the 2006 peak, the 10-city composite price index, which of course is an index which measures home prices for 10 cities they track on a monthly basis here. The 10-city composite index is now 37% higher, while the 20-city composite index is up 44% compared to 2006 peak. The 10-city index is now down by 5%, while the 20-city index shows no change compared to the 2006 high point. Here's something they added here as well, which I actually really like as well, because I talk about this on the channel when I talk about California housing market updates, and of course, the monthly update from the National Association of Realtors. I go over the changes we're seeing today and looking at how that compares to years past. The averages going back to approximately 10 years ago. So the February month-over-month average, which of course is the average change from January to February each year in 2015 through 2019, was a gain of 0.2%. And of course, this February, we saw a month-over-month increase, also a gain of 0.2%. So of course, what this means is that the gain we saw this February is in line with the averages going back to pre-COVID levels in 2015 to 2019. Even though the gain we saw in February is in line with pre-COVID levels, we cannot ignore the fact that we're down greatly compared to 2022 as well as 2021. And this graphic right here, it has a really good depiction of that, because this right here is 2021 in gray. So back in February of 2021, they saw a gain of around 1.1%. Then in 2022, they saw a gain of nearly 2%. This, of course, means that the gain we saw back in 2022 was about 10 times greater than the gain we saw this February. Corelogic also states the following here. In February, all 20 metros continue to experience deceleration in annual price gains. So an increase compared to 1 year ago, but that growth rate decelerating over the past several months now. Miami was the only metro that recorded double-digit annual home price increases among the 20 metros they track, up by 10.8% in February, but down from the January's pace of a gain of 13.9%. So in Miami, a gain of 10.8% this February, but in January, the year-over-year gain was an increase of 13.9%. Tampa, Florida ranked second once again, recording an increase of 7.7% year-over-year in February, but down from the 10.5% in January. Atlanta, Georgia posted the third highest increase, a gain of 6.6%, while Charlotte, North Carolina posted a gain of 6%. In contrast, San Francisco and Seattle both posted a decrease compared to 1 year ago, down 10% in San Francisco and down by 9.3% in Seattle, Washington. After San Francisco and Seattle, that was followed by San Diego, Portland, Oregon, Las Vegas, Phoenix, Los Angeles, and Denver, where those cities posted decreases in the range of 1 to 4%. Corelogic also says while February home prices in all markets were down compared to their respective peak in 2022. So every single one of the 20 metros that they track is down compared to 2022's peak. The rates of decline, though, have slowed because of monthly gains seen in many metro areas. So Seattle and San Francisco both posted the biggest drops compared to last year's peak, down 17% in Seattle and down 16% in San Francisco. In addition to Seattle, only Dallas, Las Vegas, Minneapolis, and New York saw further decreases compared to previous peaks, while San Francisco and San Diego actually improved on their figures here. And here's a look at home price changes from last year's peak for each of the 20 metros they track here. So Seattle, San Francisco, Las Vegas, Phoenix, and San Diego have all posted double-digit decreases from last spring's highs. In contrast, New York, Miami, Atlanta, and Chicago all posted decreases of less than 8%. And to summarize here, there are many mixed signals regarding our housing market this year, which of course is making it very challenging to report the latest trends, of course, here as well. So many West Coast markets that saw home sales activity halt in the second part of 2022 are currently seeing buyers return and competition intensifying. On the other hand, pandemic boom towns such as Las Vegas, which saw rapid price growth in the early days of COVID-19, continue to struggle as affordability declines. The trajectory of the typical busy spring home buying season will depend on mortgage rates and, of course, consumer sentiment as well. With that said, please leave a comment below with your biggest takeaways from today's video. Also, if you guys got any value of this video whatsoever, then please hit the like button. Greatly appreciate that. Of course, appreciate you. Hope you guys have an awesome day. Look forward to seeing you on the next video.